Hello, business owners. Welcome, welcome, welcome. We're gonna be starting in a minute here, just in a few more minutes while we're waiting for other folks to join us. And please leave in the comments any questions you might have brought to us today, and we're gonna try to answer as many of them as we can. We have about an hour for today's live. And I want to give it maybe 1 or 2 more minutes before we can actually start our webinar or live today. This is unbelievable. The first live that I'm doing, and I chose to pick one of the most challenging topics to talk about. So I'm excited. I am thrilled to be here with you tonight, and I hope you will be getting as much value for your time as possible. And again, I want to thank you and thank everybody for joining us today, for sparing a little bit of your time, for taking some time from your agenda to spend with me at the end of this day. So again, thank you so much. If you are just joining, welcome, 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 and please share with other people who can also benefit from today's live. So thank you. I'm gonna give it 1 more minute, and then we're gonna start our webinar. Okay. Hey, again, welcome again. Again, thank you for taking some time to spend with me at the beginning of this evening. So thank you so much for your time. Thank you for spending a little bit of time with me tonight. And I want to thank you so much for spending this time with me. Today, I want to talk to you, and I want to be very, very purposeful and talk to you specifically. If you are in this webinar, in this live, I believe it's because either you are considering selling your business or are in the process of looking to sell your business, or potentially you're looking to buy a business. Okay. We're going to be talking about marketing agency. We're going to be talking with owners of marketing agencies who are looking to exit either in the foreseeable future or in the next 3 to 5 years. Okay. So I'm going to give you 3 tips that you can use that will allow you to increase the value of your company when you sell it. Okay. So we're gonna spend about 1 hour together, and we're gonna be covering these 3 important secrets that you need to know if you desire to sell your business at top dollar. Okay. So I'm gonna be going through my presentation today with you, and I'm gonna give you a quick roadmap. But before I do that, let me tell you a little bit about me so that we can establish a little bit of trust, so that you know you can rely on the information that I'm sharing. that is not coming from someone who has no clue about what they are talking about, okay? I am a CPA, I have an MBA, but more than that, I help small businesses achieve three things. Number one, I help business owners minimize their tax burden, right? We help them reduce the amount of money they have to pay to the IRS or to the tax authorities in their given state if there is an income tax for individuals or businesses, all right? The second thing that we help business owners do is optimize their cash flow. And then the third thing, we help them improve their business to make it more profitable. And today we are talking about how do you increase the value of your business when you sell it, okay? So we're going to be sharing about three secrets, okay? And I'm not only speaking from the perspective of a CPA who worked with small business, but especially because I had a career as an investment banker, right? I help business owners selling businesses. In the firm that I used to work, we did serve clients, okay, generating earnings before interest and tax and depreciation, or the famous EBITDA, over 2 million in dollar, okay? So M&A is not strange, it's not foreign to me. It might be to some of the business owner who are connecting. Maybe this is the first time they have even considered selling their business. So we're going to give you the right tools so that you can make the right decision, so that you can improve the value of your business when you sell it, okay? So let's start with our roadmap. As I said, we're going to be covering three key secrets. So we're going to be looking into a quick assessment. You need to understand where you are, what are your motivations for selling, whether or not you are ready to sell, because it's unbelievable the number of deals that fall apart because the seller later changed their mind and no longer want to sell the company, okay? So we want to make sure you are ready mentally, psychologically, but also emotionally, right? If you're not ready yet to let go of the business, it's going to be hard for you to sell your company successfully, and especially at top dollar. Okay. And the second part of this assessment is to look at the business, right? Do you have a valuable business that you are looking to sell? Or instead, do you have a job that other people help you to execute it and you want to get out of that? Okay. So these two are completely different spheres, completely different elements. Okay. So we're going to talk a little bit about these two levels of assessment. Number two, the second element we really want to address here is about prepare. Okay, we want to prepare you so that you can improve the value of your business when you are ready to sell it, or as you are starting the process of selling the business. Okay, so we're gonna be looking into, okay, what an ideal business looks like from the lens of a buyer, okay? From my experience, I have spoken with hundreds of business buyers, like hundreds of them, whether they are private equity firms or independent sponsors or family offices or hedge funds, you name it, okay? And I know what they're looking for and what I want to add one more item here before I move to the third point of our roadmap, right? That is at the level of business that today I serve as a CPA, okay? What really, it's not really a lot of private equity firms that are looking to buy these firms, because a lot of my clients are between $1 million to $3 million in revenue, and their net profit is usually around 300 grand to approximately $1 million. A few clients over $3 million, and a number of clients below $1 million in revenue. Okay, so a lot of private equity firms, especially large one, are not type of deals. It's gonna be more independent sponsors, but we're gonna talk a little bit about these in a few minutes here. And then the third point that I am going to be talking about today is the execution portion, right? So we do this gap analysis with your business, with your personal life. We've determined that you are ready to sell, you want to sell, and you have a business that maybe needs a little bit of improvement to improve, to increase its value. Then we start putting things in motion to actually start to get the business to the marketplace. Okay, so these are the three keys that we're going to be covering and we're going to be talking about today. Okay, so if you have any questions so far, please leave in the comments. Let me know, and I'll be more than happy to jump in and answer or help you with anything that you might have going on. So I'm gonna take a pause here and drink a little bit of water. It seems like we're moving quite fast, and we're gonna get back to our discussion. So we're gonna be talking about a lot of questions, but a lot of questions, okay? Because the goal of this is really to help you think about certain very important aspects of what it takes to sell a business that you might not be considering, or you might be unaware of, or you simply didn't know. Maybe this is the first time either you're looking to sell a business or looking to buy a business. So I want to ask for your patience. I want to ask for your willingness to work with me in answering these questions. If you have a notepad and a pen or pencil, even better, because a lot of these are going to be super helpful for you to reflect on done with our live or webinar today. Okay, so let's go. Number one, we talked about assessment. Okay, two levels of assessment. And here's the first one that we are starting to cover: an inventory of our personal life. Okay. The first question that I need you to answer for yourself is, why do you want to sell? Okay. What is driving you to sell? Are you tired about with running the business and you just want to, do something else? Do you have other interests that you are cultivating and you want to pursue them? Do you want to travel the world? Or are you looking for, an exit so that you can boost a little bit of your retirement, right? A separation, a divorce that you are wrestling with and you need to sell so that, a piece of the business can stay with your spouse? Or do you have a health situation that no longer makes it viable for you to continue running the business and therefore you need to exit? Okay. So think about your motivation, because if you are in a health situation, uh, first of all, I'm sorry to hear that, and I hope things go better for you. But here's what I need you to think about, right? Is there a possibility for you to hire an outside manager for you to train them quickly, for them to transition to continue running a business, right? Sometimes an exit is not necessary, okay? Sometimes it's better to keep the business and bring in new management and pay them a little bit, and then you take the back seat, okay? So the first question is your motivation, because if you're not motivated enough to sell, you're gonna waste time, you're gonna waste money working with potential advisors, and you are going to put your business in a risky situation, especially if the word goes out that you are selling, right? As you will learn, a business sale is a highly confidential proposition until the buyer actually closes the deal, and then it can be made public, right? So it's very important to understand your motivation as a seller. Okay. That's number one question. Number two, I want you to think about is what are you going to do after you sell the business, right? A lot of people, I have encountered business owners who, after selling the business, they didn't know what to do with their lives. Some, were excited to get to the finishing line and then they got bored, right? Because they didn't, their business is what they spend most of their time doing. They invest time, they invest resources, and you might find yourself in a similar situation. Some business owner actually spend more time with their businesses than with their families. So you really want to make sure, right, you have an action plan after the sale of the business, right? Are you going to pursue other investments? Are you, a lot of business owners want to sell the business, to travel a little bit across the world and, buy some real estate to preserve some of their assets, or they simply, want to, de-risk themselves and get that cash and buy some bonds to provide for some form of liquidity. So what are you gonna do after you sell the business, right? A very important question for you to answer, right? And then the third question that I want you to ask yourself and figure out an answer, if you don't have, is whose lives will be impacted with the sale, right? Have you talked about the business sale with your family? Maybe you have adult children who work in the company. Have you spoken with your spouse about the possibility of selling the business? What's their reaction? What's their sentiment? What's their thinking, right? When you sell the business, how this is gonna change their lives, your life, right? uh, your employees, how the sale of the business is going to impact their lives, right? If you are in a partnership with, and you are the majority owner of the company, how does the business sell? It's going to impact them. Sometimes we think about business sales only in the sense of pure financial numbers, right? But there is a highly emotional aspect involved there, right? It's psychologically demanding, right? It's emotionally charging, right? Whose life will be impacted? Maybe it's a business that have been in the community for a long time. People are familiar with your face, with your management team, and so forth, right? And suddenly after you sell, there's going to be maybe new faces, right? Have you thought about how this sell could impact people immediately in your life or around you? Okay, so these are some of the questions to think about. And the fourth question to think about at the personal level is about the time frame, right? When are you looking to sell, right? If now, why now? Okay. Are you looking to sell as soon as possible? Maybe someone in the family is in a terminal disease and you need to sell so that you can spend a little bit more time with them. Or you are the person who is in terminal disease and you realize you want to spend a little bit more time maybe with children, grandchildren, or just explore the world at, you know, on your own terms, and you want a little bit of cash to do that, right? So what's the timeline? Okay, so we talked about four questions, right? Why do you want to sell? What will you do after you sell? Whose life will be impacted with the sell? And what's the timeline you have for the sell? Okay, so think about these questions. Okay, and now we're gonna transition to the business side, right? So you have figured out, okay, you want to sell, and I gave you some questions to think about. Now we're going to be looking into the business side. Do you have a valuable asset that you are looking to sell? Okay. Is the asset that you're looking to sell valuable? Okay. And I'm going to give you three questions here to help you navigate this assessment. it's very easy for business owner to be confused with having a business or valuable business and having a job that other people help you to get it done. Okay? It's very, very, very common. I see these more often than I thought it was possible. So here's a question, right? I use this as a rule of thumb as as a way for me to filter some important businesses, whether and as a CPA, I'm always looking for a new business, a new accounting firm that I can buy to grow my firm. Okay. And one of the questions that I would recommend you to ask yourself as a business owner who's looking to sell is, how do you know that you have a valuable business asset versus a job that other people help you get it done? Right? What do you have that make your business valuable? Okay, let's detach the emotion, right? When we work on our business, we invest countless hours, thousand, if not hundreds of thousands of dollars into the business to grow it, to make it something worth our time, right? But aside all the commitment we have put into the business, do we have a company or do we have a job that we do? And we're going to talk about what makes a difference between two. Let's look into the second question, right? This helps us become a little bit more objective, right? If I were looking for a business to acquire, right? In our contest, a marketing agency to acquire, right? Would I be interested in buying or pursuing the business that I run? Right? Would my business, essentially, that's the question, would the business that I run would fit the criteria for a business that somebody would be interested to buy? Okay. Very important question, right? And number three, am I selling a business or simply a book of business or a list of clients, essentially, right? And here's where the distinction between a business and a job comes in, right? You know that you don't have a business and a job that other people help you do when these happen. Okay, here's what happens to test whether or not you have a business. If you can take a month and you turn off your phone for a number of weeks and your business still continue running itself, then you have a business. But if you can't do that, if you can't take a time off for a few weeks, for a month, or if you fall sick, your customers won't be serviced, your bills won't be paid, then you are more likely not a business owner. You have a job that other people help you to do. And to sell that, it's a little bit more tougher. It's a little bit more challenging, okay? It's significantly more difficult. And when you do sell that, it's going to be at a much, much lower value than an actual business. Excuse me. Okay. So I want you to make sure that I want you to make sure that you are really taking advantage of this. You are, asking yourself this, how to prepare. Okay. This is critical. This is very important. So we have done the assessment. Now we're starting to look at what do you prepare before selling your business. Okay. The preparation process. Number one, who do you think is the ideal buyer for your business? Okay. So we're talking about marketing agency here, a marketing agency owner who's looking to sell their business. So we're talking about these folks, right? So think about who would be an ideal buyer. Generally speaking, we have two major groups of business buyers. A strategic buyer. Strategic buyer is a company or an individual who is in the same line of business to you, right? A marketing agency buying another marketing agency. This is a strategic acquisition, right? And the idea here is to take advantage of cost synergies, right? Maybe you don't need to see CFOs. Maybe you don't need two accountants. Maybe you don't need, you know, two admin assistant, right? Maybe you are acquiring this business for the reason of getting hold of the talent pool that will drive the success of the organization. Okay. This is the strategic buyer. The financial buyer, on the other hand, sometimes may not be in the same line of business, right? They are buying purely from the financial incentive, right? They want to drive a return for themselves, so they're investors, okay? So these two groups are also subdivided with many other categories. In the financial buyers universe, what we're really looking at is for people like an independent sponsor, a private equity firm, a hedge fund, a family office, and so forth, right? But when I ask about an ideal buyer, I'm not only limiting you to think about the strategic versus financial buyer, but I also want you to think about an extra step, right? And here's that step. What are the value of this potential buyer, right? When you think about someone buying your business, what value this person or this business need to be championing? Okay. What do they look like? What type of relationship this person finds valuable? What are the priorities of these potential buyers, right? Because by drawing the ideal buyer picture, it makes it easier for you as a business seller to get rid of anyone who may not be an ideal potential buyer for your business, right? You're not going to waste time in meeting with people who you know are not going to get anywhere with your business, right? Number two, to prepare for the sale. What are your expectations for this sale, right? Are you looking for what type of transaction? Are you looking to sell the assets of the business or the stock of the company, right? Two separate things, and they have two separate tax implications, right? Ideally, for the seller, want to sell the stock, but that doesn't necessarily work very well for the buyer. That's why the buyers want to buy an asset, okay? What deal structure that makes the most sense to you? Okay, are you gonna be looking for all cash at the close or most of the cash at the close? Are you flexible with an earnout piece? Are you flexible with an equity rollover? Are you flexible with a seller note? What are you looking to get at the moment you actually sell the company? Okay. And the other piece that I want you to think about is the transition phase. Are you okay staying after the sale of the business to help transition the company, or are you looking to exit immediately, right? So very important questions to consider. Very important questions to consider. Okay, let's move to the next point. When you're selling your business, organizing certain document for the due diligence stage. Okay. This is important because when a buyer comes and signs that NDA and start requesting information, you need to have certain documents ready that will help them determine whether or not this business is as valuable as they thought, and whether or not they want to carry forward this transaction. Okay. Here's some of the items you need to start getting ready. You need to start putting in place. Number one, you need to have your historical financial reports, right? Your profit and loss statement, your balance sheet. If you have cash flow statement, even better, right? If you run your books on an accrual basis, you need to prepare, your aging receivable report, your aging payable report. If you have a budget and forecast, that makes your business even stand out even more. From experience, most business owners don't have a budget that they run their business with, and they also don't have a projection, right? Much, a 12 months projections or a 3 to 5 years projections. They don't have that. If you have that, that will be super helpful and super useful to you and your buyer. And it's one of these items that actually enhance the value of your business. The other item that you'll need to have is your tax returns, okay? You need to have your tax returns because the buyers are going to ask this information. If you have employees, your HR documentation, right? Your recruiting information document, your hiring paperwork for each employees, even including, employees that you have fired. You need to have documentation for these, your training material, onboarding material, your training and development material, your W2s, your W4s for employees, all your payroll documentation, Form 9, 940s, 941s, and so forth. Okay. You need to provide some operating data, right? If you have employee counts or, if you keep track of certain KPIs, very important to share with a prospective buyer. And one of the areas that business buyers would be really digging in is your revenue reports, right? To understand your client mix, your client base, whether or not you have contracts and agreements in place. If you have any valuable IP, they will want to look into all these. So very important for you to have this information, to start organizing them, putting them together, right? So that you can make sure whenever a buyer, ask for a piece of information, you have it readily available and you share with them. That will make the deal move faster and at a better direction, right? Then every time the buyer asks you for a piece of information, takes you a week to respond, or 2 weeks. That deal may not close anytime soon. Okay. And the other piece of information that I want you to consider is the tax implication. Okay. Uh, you know, Marketing companies in the lower middle market or mainstream usually trade at 5 to 10 multiple, okay, of revenue. So if you are a marketing agency and let's say you're making $2 million in the top line, and someone offers you 5 times, right? That's $10 million at exit, but that doesn't mean that they will give you cash of 10 million, much less that at the end of the transaction, you'll have 10 million on your pocket, because there are taxes, right? If you live in California, more taxes. If you live in New York, even more taxes. So, just make sure you work with professionals that will help you really determine whether or not you actually have the right tax or entity structure in place that can help you reduce your tax burden. Okay. And continuing in around the preparation for sale, right? The two additional point that I want you to think about is who's gonna be part of your deal team, right? Especially if you've never done an M&A transaction before, you've never bought a business, you've never sold a business, you'll need at least 2 to 3 advisors, okay? One of them is your accountant, right? To help you prepare your business for sale, organize the information that the buyer is gonna need, right? Your M&A attorney, right? Very important to have an M&A attorney to draft the contract that will protect you, that will transfer whatever you're selling, whether it's the stock or the assets of the business. You also need to have an M&A advisor or an investment banker or a business broker, right? Businesses below $10 million in revenue usually can be served, may be serviced very well by business broker versus investment bankers. Investment bankers can be a little bit expensive compared to business broker, but they can get a little bit more transactions done than business brokers. And plus, most investment bankers are expected to be licensed professionals. Some business brokers may or may not be licensed, but that's not necessarily to say that business brokers are not good professionals to have around you. Absolutely, they are amazing ones out there that can add significant value to your transaction. Okay, and the last point around preparation is to really think hard, right, with the help of your professional for any major issues that could become deal breaker as you put your business for sale. Okay. So here's a list of a few items that you need to think about as you are thinking about this M&A process. Okay. So number one, accounting issues. Are your books cleaned, right? Are they caught up? Are you behind in your accounting? Okay. Are there certain entries in your system that shouldn't be there, right? Are your accounts reconciled? Okay. Do you have a P&L, a balance sheet that is accurate? Do you have a cash flow statement? Okay. Very important element, right? Do you have any unpaid taxes, right? That could, cause issues with the transaction, especially payroll taxes. Have you been dodging the IRS or the state by misclassifying uh, employees as an independent contractor so that you can avoid paying the the FICA taxes? Okay, so very important thing to think about. Are there any outstanding lawsuits, right, from clients, from vendors, from employees? Do you have employment challenges? Is your agency in a place where there is significant turnover, right? Every year you lose half of your team or 70% of your team, and you have to start over again every year, right? These are some very important issues that you need to address before moving to the transaction side, okay? Uh, what about your client base? Is it unstable? Do you have a healthy client concentration, right? Do you have a client that brings 50% of your revenue, for example? If that's the situation, your business might not be as valuable as you think. It could actually be at a very major risk before, because if you lose a client that brings 40-50% of your business, right? Your company is a very risky business, and very few people would want to buy it. Does your business have lack internal controls? Does your business lack appropriate system, processes, and procedures to make the business run with or without you? Okay, you have a major dependency in a single individual, a single relationship, a single resources that if there is a bottleneck in this individual or relationship or resource, your business literally could lose thousands and if not dozens of thousands of dollars. So these are very important questions that you need to answer, right, as a business owner. as a business owner before you can sell your business, okay? And now we're gonna start moving around executing for a successful exit, okay? So once we have thought about all these questions, right? Remember we talked about assessment, key number one, assess, key number two, prepare, and now we're moving into key number three, execute, okay? Now, you need to get clarity around what you truly want to accomplish with the sale, okay? What do I want out of this business exit? What's the timeline that I have for this exit? What are my valuation expectations, right? Am I being realistic with my valuation, or am I a little bit over what most people would think makes sense for the type of business that I'm running today, right? Maybe by making some changes around the issues that we addressed could improve the value of your business, right? But right now, is your valuation the most accurate? Is your valuation the type of valuation that the marketplace will be excited to pay for? Okay. And getting clarity around what your life goals will become and what your priorities will look like after the sale. Okay. Once we have moved past this, then we start the organization of the business for exit, right? Preparing the due diligence item, making sure we have the financial data, the financial reports, the tax returns, the HR documentation, the operating data and KPIs, revenue reports, clients file, employee files, IPI documentation, processes documentation, system documentations, right? To make sure when someone come in and ask us for the information that they need to do their due diligence, we're actually gonna have that information, okay? And number three is to be able to address the deal breakers, right? Concerning issues from the previous page that we just saw, right? Being transparent is fundamental, right? Don't try to hide, lawsuit that happened a year ago or a bad customer that took place, but address them, right? Hey, look, last year we had a customer that wasn't happy with the work we did for them, and they sued us. We paid them back, and now we learned from that lesson, and here's the changes we have made. It's a better story, right, than hiding that, and the potential buyer comes to find it, right? It doesn't leave a good taste to somebody's mouth, okay? So transparency is key. And I'm gonna say this not because I'm a CPA and I'm here sharing valuable information, but I'm gonna say this: if you don't have experience around M&A deals, hire professionals who have experience and who can help you. Don't try to go through this alone unless you're willing to leave money on the table. Okay. As I said before, you need to have an accountant, you need to have an M&A attorney, and you need to have either a business broker or an investment banker or an M&A advisor. Excuse me. By having these people, you will be a little bit more successful, right? So remember when we talked about the need of the deal team? This is the time, right? This is the time. If you're planning to exit in 1, in 2 years, in 3 years, start building your dream team now, right? Start getting your business in order so that when you are close to exit, right, you're gonna have a solid business, a valuable business to sell. Okay. So here's some information about me. If you want to reach out to me, if you are looking to sell your company and you need help from an accountant to advise you, to help you prepare for the exit, I'll be more than happy to get in contact, in touch with you to assist you and your team. Okay. Again, remember M&A transactions are highly confidential. This is not something you should be telling the world until you actually have a deal done. Okay. And make sure, you are continuously monitoring the market to determine whether or not you are in the right time to sell, or maybe you need to wait a little bit. Excuse me. We are in a very uncertain economic phase and politically charged, and believe it or not, these things also affect the valuation of businesses. Right now, it's a little bit challenging for people to borrow money and buy businesses because debt is a little bit more expensive right now, as you know. So, I would say if you are looking to sell as soon as possible, be a little bit flexible, be a little bit open to some deal structure that can bring a win-win situation. Okay. So okay, I'm seeing here. Okay, what's the appropriate timeline to sell a business? Uh, that really depends on the market, but I will say consider at least 18, a year to 2 years as a good time frame to sell a business. A good time frame, 12 months to 24 months. M&A deals are time consuming, are exhausting, are long. Sometimes the deal feels like it's never gonna close, especially if you don't have a really good and strong business for sale. It could take you even longer to sell. And unfortunately, a lot of people are in a position where, they don't really have a valuable business to sell because nobody wants to buy it. And especially there are certain industries out there, marketing agencies are great businesses to buy and to sell, but cyclical businesses are very hard to buy and to sell. Think about construction companies are very challenging to sell, remodeling company, other very, you know it drives a lot of the activities there. Restaurant businesses, they can also be very challenging to sell. So I'm gonna pause here. That's the question. I hope that's helpful. Okay. What do you do if your business is in the market for over 2 years? Okay, well, that's a great question. And my answer will be, maybe if you are really desperate and you want to exit, or you are becoming impatient and you want to exit, my recommendation would be that hire, uh, let's say you have a business that generate 300K for you in net profit, bottom line, right? Maybe you could hire a business manager to run it and pay them 100K, right, per year, and you pocket 200K without even having to work, right? So that could be something that works on your favor. And, you know, And some people lower the price, but I don't think that's necessarily a good, bargaining position. Yeah, so I look forward to hearing from some of you who have followed me today, who were part of this live. And if you have any questions, any comments, my information is there. We also have a free ebook that we are providing. The link is there, www dot luntadilapaulo.cpa.com/7 mistakes, and you will find the ebook there. So thank you again for your time today. Thank you a lot, a lot, a lot, a lot. And if you have any questions, any comment, please reach out to me. I'd love to connect with all of you. All right. Have a great rest of your day, and God bless. Cheers.